Welcome to Ty's Daily Market Update. I'm Tai Wong reporting from New York, and it is Monday, July 20th. The positive news on the day, and for a while it had oil down a bit, was that Iran says mediators are stepping in after days of clashes with the U.S. Iran said mediators have been in touch on proposals how to ease hostilities with the U.S. The foreign ministry spokesman said ideas have come from mediators have been conveyed to Tehran. Their interior minister is traveling to Pakistan today, and Pakistan has been, has been the interlocutor between the two sides over the past 2 or 3 months. Now, there's no indication that there's going to be a ceasefire, but the proposal is for a 10-day ceasefire to try and see if everybody can calm down. Now, what's interesting is Israel says if Iran makes the mistake of attacking the state of Israel, we'll respond with a might surpassing that of the last campaign. So that, unfortunately, if hardliners in Iran want to stop the peace process, they could just hit a few civilian targets or try in Israel, and then there's going to be no peace. In the meantime, New York Times is reporting that the U.S. is sending more warplanes to the Middle East. So, but generally considered good news because Iran is talking about mediators. And it suggests that, what has happened over the past 2 weeks has been quite painful. But on the other hand, and this helped oil go back up, is Yemen's Houthis, and they control that little bit of area near the exit to the Red Sea, threatened to impose a blockade on Saudi. And these Houthis have been backed by the Iranians. Saudi has fought a war against them for probably a better part of 10 years. And they said the ban on Saudi ships would be effective immediately. So the kingdom diverted a lot of its oil supplies to the Red Sea port of Yanbu that goes through the bottom of the Red Sea, 4.2 million barrels a day a month that help limit disruption. And you can see here, before the war, most of the barrels went through Hormuz, about 7 million barrels a day, 6+ million went through Hormuz. Since then, almost none are going through Hormuz, but over 4 million are going through the Red Sea. So I think they've disrupted traffic before. They can't really block it, but they can threaten enough that insurers may not want to insure it. Now, if Saudi really wanted to make sure that its shipping was getting through, they could do it. They could get the U.S. to help, and they might have to ensure the ships are going through. So they could cut this number down, but not completely eliminate it. So this thing is helping oil come back up from earlier. Now, I want to go into a little more detail about this China Kimi K3 model that came out on Thursday night U.S. time and led to a mini panic. They're calling it the Kimi moment because the model was almost as good as the best of OpenAI and Anthropic. So now on the positive side for them, Moonshot said they were forced to pause new subscriptions on Sunday after a stampede of demand overwhelmed its servers. Too many people were trying to download. And I mean, to download that, or I don't know if you can download it then, but, to try it out, because I think the download's not going to be available for another week. And it's a big download. It's like 1.5 terabytes. But so many people were trying to use it that it overwhelmed their servers. Now, what's interesting is Dean Ball, who worked at the administration, who is now a senior executive at ChatGPT, said, China's strategy of giving away its AI code would be full AI communism, which is precisely what China wants. And he suggests as a result that the Trump administration is going to limit the use of Chinese AI models. Now, Alibaba's model has already been blacklisted by the White House. This one may go the same way. Now, what's interesting is Moonshot's model is cheaper to run, but it's, only 95 cents for each intelligence index task compared to $1.04 for OpenAI's most advanced model. So that's a difference of about 10%. That's not a fraction of what we had the DeepSeek moment last year. I mean, a 10%, would you give your data to China? Certainly if you're an enterprise for 10%, I don't think you'd do that. But analysts are saying that the Chinese want to let their models out, let everybody use them cheap, and then once everybody's on them, they'll reassert control. And it's the same, strategy that they use for the solar panels and the automotive industry. Basically, they undercut everybody. Nobody can make them, can beat them in pricing. And once they control the market, they can start to raise prices and make you do things that you don't necessarily want to do. But what's really interesting here is the Moonshot model is actually not cheap. It's only a little bit cheaper than the best models we're seeing from the US. So I looked at Dean Ball. He wrote a long piece, and I've cut some of it on X. And he said, you know what? It's a very good model. It's not like they stole it. It's really pretty much on par with the best models, of the last quarter. So, I mean, it's not very far behind. Now, he repeats again, it's very token hungry. It's not that cheap to run. Now, basically he says the Chinese, are, willing to give away the models for free, partly because, they feel like, they want to dominate the market, but also because they are still behind. And why would you pay a lot of money for a model that's not a frontier model from China? The other thing, and then he gets a little philosophical here. He says open weight models are inherently decelerationist. That means it prevents more advancement. And, because, there's, a free model, will people pay for a model that's expensive? And what that will do is deter further capital expenditure in AI, which is, probably not good for the US market, if that happens. Now, what he thinks will happen is, they want a full AI communism. Basically, they want to make AI a public good. You get it from the government. It's digital public infrastructure. And, Dean doesn't like that because then, if the AI is a public good controlled by the government, then they control what you do with AI. So he calls it a dystopian hellscape. Certainly, I don't think the Trump administration want that, or any other administration other than perhaps a deeply socialist one, which I hope we don't get. Now, he says the best strategy is the Trump administration will make it very hard, make it a regulatory risk to use these. And you could just see, imagines a Federal Reserve saying, there may be backdoors in Chinese AI models. And at the end of the day, it's the enterprise people that are really going to pay for AI. It's not me paying $20 a month for Anthropic and ChatGPT, right? Each. It's the many thousands of dollars, perhaps per user that you're going to use that AI. So you can really, close the door here in the US based on that. But the last thing was a little frightening. He said, it's probably true that open weight models of this capability make the world a bit more dangerous. And he said, at some point, these models will be capable enough that you'll notice, like Mythos, right? We held it back because it was so dangerous it could hack different things. So he goes, imagine a non-living, invisible, dangerous, and infinitely self-replicating agent escaped from a Chinese lab. That is electronic COVID. That could be a real problem. Now, Google had a real tough week last week. 2 days down 6.5% because Gemini was delayed. They were struggling. Well, they got some good news today. They announced that they were developing a server chip designed to optimize Gemini. It's called Frozen version 2. I guess maybe they're a fan of the of the movie. Could be deployed as soon as 2028, separate from their TPUs, but it would reduce the amount of data the chip has to move around, making it faster at responding to queries. And everybody's trying to develop their own chips. OpenAI is working with Broadcom. Amazon's looking to sell its chips to other companies' data centers as a way to monetize all the money that they're investing. And Alphabet is seeing a lot of demand for its TPUs. Now, they say that Google, hasn't had a really good experience with consumer products. They're not Apple, although, their phone, I think the Pixels are actually very good phones. But this is definitely good news to Google, good news for Google, and they're up 2% today. So Douglas Kim, he does a lot of good work on Korea, and he quotes Smart Karma. He says he thinks over the next few weeks, the 30% ADR premium for SK shares in the US versus local shares could be halved to more or less than 15%. The ARBs are chomping at this opportunity. Barbarians are at the gate. So the question is, who can actually arb the two differences? It's not everyone can do it, and we'll see how much, there'll probably see some regulatory issues potentially that they have to solve. But if there's 15% or 30%, ARB, everybody's going to try their best. So it's probably a little bearish for the SK ADRs in the US. Okay, where are we today? Software actually doing very well, 1.3%. S&P futures up a little bit, SK up a little bit. Again, we just talked about that. Mag 7 also up. Now, overall, energy is sideways, right? Energy was down a little bit earlier, but back up because the concern about Houthis and Trump. Gold and silver mixed, yields are a little higher, so the dollar's higher. And Bitcoin is actually doing 65,000, doing pretty well, leading a rally by the rest of the major crypto coins. Okay, S&P, most sectors are down, but hey, comm services, technology, and energy all up, which is enough to balance off everybody else. Let's see how we close. You know what? Brent is trying to figure out, do we have, actually maybe some peace talks, the Houthis yelling and Trump getting angry. I mean, right here, it's an interesting doji. Typically, this suggests that the market's ready to turn, but it's so many headlines related that this is tough to trade right now, particularly tough to pick tops. Gasoline, gasoline is, sorry, this is gas. Actually, no, that's true. Gasoline is mostly unchanged, but diesel is higher, and diesel is probably more important to inflation, but gasoline more obvious to Americans. And gasoline is back at $4 a gallon on average for the first time in a month, and that will matter. That may help the peace process along a bit. Quick look at the Fed. On the week, the hike probability change for the July meeting, it went from 42%, which was insane, to 14%, which is still too high. That's next week. September 16th, the September meeting, 75% to 64%. I still think that's high. And December, from 89 to 83, that didn't really move, and that I think is far, far too high. Now, we have a lot interesting earnings this week. Tomorrow, we have a mix with Schwab and Interactive Brokers, the financials. We've got 3M and GM, some manufacturing. And I want to look at D.R. Horton, which builds houses. Wednesday's the big day. Google, Tesla, and SK. Oh, the asterisk, by the way, means they come out post-close. GE Vernova, manufacturing. I want to see ServiceNow for software. And CSX is transport. And Thursday, we get Intel, RTX, which is defense, the former Raytheon. And then we get a couple of mines, Newmont, Freeport McMoran, as well as PE. And Friday, the last one, this is the Chinese chip maker. So pretty interesting earnings on tap this week. And then finally, not a lot of data. We have ADP tomorrow, the energy report, the weekly energy report on Wednesday, as well as the 20-year bond auction. And then Thursday, we get initial jobless claims. And then Friday, PMIs and new home sales. Thanks for joining me, and I'll see you again tomorrow.